Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Today is April 13th, 2026. And before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Norsemont Mining, an advanced exploration stage mining company engaged in the development and resource expansion of its Choquelimpie gold, silver, copper project in northern Chile. It's Marc Levy. Great to have you on the show.
And thanks for having me again. It's good to catch up with you.
Absolutely. The tailwinds that drove gold to all-time highs earlier this year appear to be intact, but it has sold off since the war in Iran began. We're seeing it at around 4,800 as we sit here today. I'm wondering what your current assessment of the gold market is, and do you foresee us hitting new all-time highs this year?
Yeah, for sure. Obviously, I'm very pro. I'm a big gold and silver bull and copper. I may not be as bullish as some of the more famous people out there, like Eric Sprott or others that are predicting, double-digit gold price. But I'm definitely a believer that we can see $6,000 gold at the end of the year and $7,000 gold next year. Obviously, this Iran conflict has, made a pullback in the gold silver markets, which I think this is a great buying opportunity for anybody that missed this. When gold was flying above 5,000, I think this is a once in a lifetime opportunity to step in while there is this conflict causing a lot of friction in the markets and confusion in the markets and obviously concerns. So I look at this as a great buying opportunity. There's a couple of stocks that I was trying to buy and they got away from me. And now it's like, okay, on these crazy days that gold drops a certain amount, it's good days to buy. I think we're going to see some stability here. It seems to be stabilizing in the 47, 4,800 here. I know it's up today, for example. But yeah, that this Iran conflict has definitely put a big, I guess, stress on the gold silver markets.
Well, speaking of that, we are seeing potentially the petrodollar under threat as the Iranians are selling oil for yuan. I've heard other reports that they're now insisting on Iranian currency. Some people have talked about that they're potentially allowing people to pay with stable coins. The fog of war is obscuring a lot of what's going on, but they are certainly selling oil not for US dollars. And there are some reports that indicate that they have been selling oil to China using renminbi for years at this point. If we enter a new era where US dollars for oil is no longer the norm, is that game over for the dollar as the reserve currency? And what would that mean for gold?
Yeah, I don't think it's going to be game over. I think, like you just said, they were already selling oil to China, and China wants to use their currency as a world currency. They've been trying for a long time with all the BRICS countries coming together. I think there's good marketing and PR by Iran to undermine the U.S. dollar. We all understand there's some serious issues with the U.S. dollar with debt levels in the United States, but it's still a world reserve and it has liquidity. And I think the government of the United States has some plans. I mean, I was at Rick Rule's show last year and we were all watching. I was sitting next to Rob McEwen actually, and we were all watching a guy talk about how the US is likely to put together their gold-backed treasuries because nobody's interested in the treasuries so much anymore. Gold-backed treasury is going to attract worldwide investment if that's what they do. And I think there's some legal documentation, I don't know the right wording out there, indicating that's the path they're going on. And the US is betting on gold. They may be betting on cryptocurrency because of the bias of the president, but they seem to have a plan to help dig their way out. I don't know if they'll get out fully, but I know other countries, unfortunately, don't have a plan. And so, I'm not too concerned about the U.S. economy. It's one of the largest economies out there. They all have a lot of oil. Me being Canadian, we're right across the border from them. Canada has a lot of oil. We're probably number two, number three in the world for oil. So hey, just knock on our door. Let's figure something out. So there's a lot of options out there, but I think Iran's doing a good job at playing the PR here and trying to somehow put a dent into the U.S. demand for US dollars and currency.
Yeah, that's an interesting perspective that it is a PR move because we do have to remember a lot of this war being fought is also involving optics, what's going on in the media, what do people believe to be true, not necessarily what is true. So I think people need to be very aware of that. Now, silver has been on one hell of a roller coaster ride over the past several months, screaming up to nearly 120. I believe the highest close was $116 an ounce. It collapsed over 25% in a single trading day. Now we're sitting around $78, $79, looking like it's creeping back up to that $80 level. What do you make of this wild price action, and how much room do you think is left to run for silver in this bull cycle?
Sure, it's interesting. Back in October, I believe silver was about $54, and I think we watched it race to 108, and as you said, 116. And I think guys like Rick Rule said, "I'm selling, 80% of my silver. I'm selling my silver." There's a couple of famous people saying they're selling silver, and I didn't. I'm not as smart as them, but I'm a long-term big believer. I think silver running to 116 was a bit crazy that quickly for it to move. And now it's retraced, and I think it's formed a new base. I think when silver was $65 recently, $66, I told a lot of people, you got to start buying. This is a good buying opportunity. And I think, $80 silver this year plus is easy, and seeing $120 silver, $150 silver next year is easy. We just saw we saw 116, as you said, this year already, on based on some unique situations that occurred. I still think there's a lot of legs left, a lot of torque in silver for retail investors and investors alike. I think this is, any pullback again, buying opportunity.
Absolutely agree with you there. And if gold and silver, and especially silver, as you outlined, are looking pretty good at these levels, the gold and silver mining stocks continue to look undervalued versus the metals. The SIL ETF outperforming silver by only around 12% to date. I haven't checked the most recent numbers, but these are fairly accurate. I believe the GDX outperforming gold by around 5% year to date. Most investors in the sector were obviously expecting a much greater outperformance, that levered exposure to the gold and silver price through owning the equities. What's your take, and how do you see the miners playing out from here?
Yeah, no, that's a really good point. I bought into the metals physically early in the cycle, physical, but obviously we have a majority of our investments in portfolio in the stock side, and we're pretty surprised that the stocks haven't done anything spectacular. As you mentioned, the performance on some of the ETFs and the indexes, they haven't really had that leveraged performance. So I think the equities are probably the most undervalued component. I do feel at a certain point here, they will catch up, and I think there's greater gains in the equities than in the physical metals. I don't see why, if silver is going to go from $75 to $150 in the next 2 years, I don't see a silver company, a senior silver company, doubling. I see it quadrupling or doing, even more than that. Even the likes of gold producers, I talk about Agnico Eagle a lot as an example. Their earnings are going through the roof, and they've done well in the last few years. Don't get me wrong. Our portfolio, we're up 4 or 5 times. We love Agnico, but I still think there's a lot more torque in the equities, not just big cap, obviously small cap, mid cap where we sit. I think that's got the most torque out there. So I think people, should be investing, do your due diligence. So I'm not giving any advice. I'm not supposed to, but I really feel the sector is underperformed, and there's a lot more upside in the equity side of the equation than the actual physical metals.
Once again, absolutely agree. And I think that's a good segue into discussing Norsemont Mining, how the company fits into the picture. It's been a while since I had you last on the show. So could you start by giving us an overview of the company?
Sure. So we acquired in 2020 the third largest former gold producer in northern Chile, with a full infrastructure from Copec, a very large conglomerate in Chile. And my family, a major investor, we wanted exposure to gold. Hey, what better way to buy a former gold mine, and let's turn it back on. And so we own a very large project, 25 square kilometers in northern Chile. We've got a 3,000 ton a day plant that We've inherited. It's in great shape. We got to do some, tuning up. And we've got full infrastructure. We've got roads. We've got power. We've got backup generators, 35-man camp. We have a lab. We have an ADR plant. We have leach pads, and we have stockpiles. So we've got an existing resource on the project. When we acquired it, there was a 5.5 million ounce non-compliant, non-43-1 compliant resource done by AMEC Foster Wheeler. That's why we liked it, and it was contained in the first 70 meters. We've since re-assayed a lot of the core, and we've brought some of the resource into 43-1 standards. So we've got a total of 2.74 million ounces of gold equivalent. 80% of that is indicated, 20% of that is inferred, and 20% of that is oxides. So we've got a really existing robust resource contained in the first 70 meters of our project. And we've demonstrated this project goes down 200-300 meters. So we've targeted growing the resource over time to 7.5 to 9 million ounces based on drilling down to depth and along strike. We've got an 8 kilometer strike of exploration targets. So we've got a very unique situation where we're doing exploration work, advancing a resource, and we also are marching towards a production scenario. We're anticipating to get the project back into production in 2027 here, and we've already started our environmental assessment that should be done by the end of the year, and then put in the application to be able to go back into production in early 2027, and they have to review it, process. So, we're targeting 18 months away from a production cash flowing situation in a very, I think, robust gold market at these prices. So we've got a very, two tracks that we're going down with a phenomenal team that's done it before. We've got, Michael Thiel, who's built one of the larger mines in Chile and turned around one of the largest mines in Chile. We've got the guy who discovered Grasberg on our team. We've got a really strong technical team, and that's had a lot of experience in Chile. And we've well capitalized. We've raised a bunch of money from strategics along the likes of Crescat, Quentin Henning, Rob McEwen, Paul Matizik, Victor Cantori, Larry Lepard. We've got one of our largest shareholders out of Germany that owns about 20% of the company, and recently took down one of the largest pieces of our placement that we did, 15 million in December. So we're well capitalized with over $20 million in our treasury. We've got all our warrants in the money. And as you said, share price. We talk to analysts and they don't understand why our stock's not a multiple of where we're at based on the resource we have in the ground and the level of the resource. And we're not really being treated as a near-term producer because we haven't focused on that part of the story, which we are focusing this year. And that's why we're doing engineering studies, metallurgical studies, environmental impact assessment that we've started. So we are marching towards that scenario to get to cash flow, especially when we think that this gold market will go and see $6,000 and $7,000 gold. And typically, cash costs in Chile on a leaching operation like ours is about $750 an ounce, even in this climate. I think we used to say 500, 550, but inflation, labor costs, fuel costs, as we all know, gone up. And so, at a $4,800 gold price, if we can produce 35,000 ounces a year, there's $120+ million profit at these gold prices. Imagine, as gold marches higher. So unique opportunity for us. I'm one of the larger investors in the company. Our family's put in over 10 million into the project. So, we're aligned with our shareholders. I care about share price. I'm here to put this into production and generate the highest share price and valuation for our shareholders. And we've never done a bank-led funding, so we don't have analyst coverage. But all of our investors are all sophisticated, longer-term, strategic mining guys. So all our money comes from people that understand what our project is worth today. You've got guys like Don Durrett who've come out openly and said we're a 10 bagger from where we are today. I think we made his list last year, top 5 or 10 this year again. John Fennick's been a big supporter. Alan Barry Laboucan. All these guys see this being a very large scale project, world class production play, and we all believe in that. And we're hoping to. We just uplisted onto the OTCQX, so I think we'll get a bit more exposure in the U.S. market, which is nice because all our money comes from the US and Europe primarily, longer term capital. And we are anticipating to apply to a more senior exchange like the New York or the NASDAQ the second half of this year as well to get better valuations, better liquidity. We're focused on trying to increase our liquidity, attract larger institutional investors. So got a very, unique opportunity. We're the biggest investors in our own deal as a family. So you don't see that very common in Canadian listed issuers where someone is 10 million into their own deal. That's very uncommon. We can't find a better opportunity, so we continue. Our family, when we're permitted, continues to invest in this, and we're not anticipating to do any funding because we don't need any money this year. We have enough capital to execute on our programs. We've got drill results pending. Metallurgical results pending. We did announce over limit assays on our last news release of drill results, which were spectacular. Gold results, 109 meters of 1.1 grams of gold, but we didn't include silver because there were some over limits that we need to calculate and other metals. So that will come out shortly. We have a few more holes to report on, and we've mentioned to the market that we start drilling again here in April. So I think we're going to be very busy this year, generating a lot of news flow and getting attention from the market here with our drill results. And I think, we're one of the best undervalued stories out there that's a near-term producer out there.
That was a great summary. I love that you mentioned both cash on the balance sheet and skin in the game in your summary. Great thoughts there. Now, I want to dive a little bit deeper into the Choquelimpie project. You outlined a lot for us, but any other details you could fill us in on, particularly when it comes to relationship with local community and the government there in Chile, for those who are maybe not so knowledgeable about Chile as a jurisdiction? It'd be great if you could shed some light on that as well.
Absolutely. Great question. Chile's probably the number one destination right now in South America. Guys like Agnico Eagle have publicly stated within our industry that Chile's number one, Peru's number two. So they're hunting in South America, and they're a very conservative gold producer we all love and know. Where we're situated in Arica, we're in a very impoverished area in northern Chile. There's no other game going into production to create much needed jobs. So we have the indigenous community that's been on site and did a prayer for our first drill program. The underlying landowner, she's been the landowner forever and ever. She's one of the more influential in the community. So she's obviously on side. She gets paid monthly for us. And she insists that we hire what she labels her grandchildren, which are the local, people in the community, the 30 to 40-year-olds, to give them a future. So we hire within the community. We provide water to a local mine in the area as well that's in production, a borate and lithium producer. So we've got water, which is very unique in Chile. Rio 2, I believe, has to truck water in and desalinate, where we have 4 wells already on site. So our cost and access to water is a lot better than some of our peers out there. And the community has been super supportive. The government in Arica, our chief geologist in Chile, Roman, is the mentor and trained the head of the Arica government, which is great because there's a good relationship there. When we went to meet them and he's introducing Roman as, oh, this was my mentor who taught me everything. We were like very pleased to hear that. Obviously, it's a good thing for us. But even without that, the government's been very supportive. It's almost, they want us to be in production faster and sooner than we want to be in production because they want cash flow and they want benefits for the community, and we want to provide that. So it's very supportive. There's not a lineup of mines going into production in the area. We're the guy. So they're like, okay, when are you submitting? When are you going to be finished? How's the environmental going? It's kind of a unique situation where they're pulling us. We're not having to, push on them And so the government's been very supportive, local and federally. They know that this is a big opportunity for the community out there. So
That's great. Now, could you shine some light as well on the recent news you've released? You touched on this as well earlier, but there's two news items I want to focus on. The one in February, you released some drill results. Last month, you put out a press release that an environmental impact declaration for the project is targeted by December of this year. Could you walk us through the details and how both pieces of news affect the advancement of Choquelimpie?
for sure. Maybe I'll even take a little step back. On a prior news release, we put out that we hired an engineering firm that's come down and done a full 3D scan of our plant, and from the smallest bolt to the largest electrical panel. Good example, because I know we have to change that. We know now what we need to fix within our plant. We know the cost to fix it, timelines to fix it. We should be putting out news about that, but we have the internal data. So that's an important step to get the plant up and running again. From the environmental side that you talked about, the DIA, we started that in January, and then it's a 12-month process to continually monitor environmental and sampling of the ground, the water, and flora, fauna, all that kind of funny bugs and bunnies studies, as my colleague calls it. So we'll be finished that in December, and then we would submit that to the government, and they have a 6-month window to walk through that information and allow us to put our plant back into production. Um, I don't believe it'll take that long because there's no lineup. If there was a lineup of 4 other mines coming in and they're busy and they're taxed because of their time and limitations, then it might take longer. I think it'll be a lot sooner because they're very motivated and they're not so busy. They're waiting on us. So I think that process could be even shorter than that. But that's part of the process to get us back into a producing scenario. We've got stockpiles on the ground ready to process and get us into cash flow. From a drilling perspective, we started our phase 3 drilling in November of last year. We drilled 7 holes, and the weather changed on us. And typically, we can't drill in January, February, March is kind of the winter altiplano. There's lightning. It's a bit dangerous. Some people do it. Some people don't. We didn't want to take the risk, and so now we're back to drilling. As I said earlier, we did put out some spectacular drill holes. You saw our stock kind of have a good run. We went to $1.80, and then with all this Iran stuff, we kind of took a big hit. Like a lot of equities took 30 to 40% hits, and we're sitting, I think, at $1.35, $1.40 range. I think we're highly undervalued at these levels, obviously, as the CEO, and I'm biased, but I think huge upside. And we've got a news release that went out with that last hole. We talked about 109 meters of 1.1 grams of gold. Didn't include other metals. And second paragraph talks about the fact that we have some over limit assays that we're waiting on with other metals that are very indicative of certain geological settings for the project, and obviously will bring up the gold equivalent grade when we incorporate over limits on silver and other potential metals like copper, lead, zinc. So that news should be forthcoming. So far, I think all the holes that we've drilled on the project have produced good or great results, and we still haven't drilled the most exciting areas that I kind of like. There's some access stuff that's being worked on to get access to some of our other areas. Our project, actually, funny enough, Don Durrett taught me something about my own project here, that there's very few projects that are listed that have world-class, 500 gram meter type holes. And it's very rare, as he mentioned. And he says there's only one company he knows about that has about a half dozen. And I was like, okay, well, who? And he goes, you. We have in what we call the Surrey zone, so the southern western zone, we have a drill hole that's over an ounce, over 24 meters of over an ounce gold. in the central part of it in Choquelimpie pit, we have several drill holes, and I mean like 4 or 5 drill holes of close to 100 meters. Some are 90, some 120 of 4-gram gold plus 5 to 20 grams silver. So world class holes. And then in Vizcacha, which is our high grade gold zone, we've got a spectacular 35-meter hole of 32 grams per ton gold and 8 grams of silver. We want to drill those to depth. So all these holes I've told you about, they all end in mineralization, so they actually go deeper. And so we want to go back and drill some of these areas that we haven't drilled. We've been doing a lot of geological testing. So I think it's going to be a very exciting time with us drilling. And we still have, think we have 4 more holes to put out that are assays pending on. So should be a fun time, fun summer for us anyways.
Absolutely. Now, we've covered a lot today. What would you say from everything we've discussed and anything that we maybe haven't touched on? What are the main catalysts that shareholders of the company can look forward to for the remainder of 2026 and beyond for Norsemont Mining?
I think there's so many catalysts that we've talked about, but I would say, we've talked about our uplisting to a more senior exchange. But I think really drilling results are going to really drive the retail market. That's the key thing. And we've got a budget this year to, I think we're going to spend about $13 million drilling this year. So we plan on doing a lot of drilling. And we have our phase 3 to finish up, and phase 4 drill program will get started. I think that'll be exciting. I think once we put out the exact dollar amount of what we have to spend on the plant to get it back to speed, and we anticipate it being, in the $20 million range, which is peanuts, that's going to show the market how prepared and how advanced we are towards production, that I think we deserve to be re-rated. I was talking to some analysts and bankers in the US, and they were asking me high level the story, and they're like, your market cap should be, their view was, well, if you're got indicated resources and this much resource at $250 an ounce, you should be this, and then your near-term production. So once you're in production, you're 500 an ounce. They were talking about valuations that we should be trading at as 500, 600, 700 million. And a good comparable that I throw out there is Rio 2. They're in production. They've done an amazing job. They're sitting around a 1.7 billion market cap. The last time I checked, I haven't really looked recently. And they just started pouring gold in January. And their grades of their gold is much lower than ours, less than half. And they have to truck water in, and they had to invest several hundred million into infrastructure, where we already have that couple $100 million worth of infrastructure sitting there. So our capex is very low. Our grade is much higher. And key is water on site. So I think the potential when we get into production is to have a similar type of valuation. So that's, huge from where we are today. And that's what I'm here for. I'm here working hard daily, traveling. You know me well enough. I'm a work machine. This is my baby. This is all I care about, and from the work side of the equation. And until we get this in production, I don't think and we're not that far away. We're not going to get fully valued. And once we're in production, that's a different game. That's a different story completely. That'll be a lot more fun.
Well, Marc, this has been a fantastic conversation. I'm going to put links in the description below to the Norsemont Mining website, as well as social media for people who want to follow along with the company. Awesome time chatting with you. As always, thank you so much for coming on the show.
Appreciate it, and thank you very much. I'm just out in beautiful Panama doing presentations at the SMI conference, so hopefully that goes well, and I've got a lot of meetings lined up over the next 3 days here to keep busy. And I think we'll be at other trade shows as well. I think we'll be at a couple of trade shows in Florida, John Fenwick's trade shows in Washington and Florida, and we're also going to be at the Centurion One trade show in May in Florida as well. So we're out there telling the story, pounding the pavement, doing our job, and advancing things. So appreciate you giving us the opportunity to catch up. That was great, and look forward to the next one.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.